Hello everyone, I'm Deborah Young, the CEO of the RegTech Association. I've been involved since we established the association back in 2017, and together with our board and the advisory committee and the executive team, we are helping to steer the ship RegTech for the industry, enabling the rising of the tide to float all of the boats and to realise our dream of a global centre of excellence for RegTech from as far afield as APAC to EU, UK, US and much further. The program that follows will feature some world-leading speakers talking about protecting people. But we don't stop there. After a year of gathering insights from regulators, we'll also speak on the themes that are keeping them awake at night. The theme protecting people was chosen not because it sounds nice and warm and fuzzy. It's actually been chosen because we fundamentally believe that RegTech and SupTech provide the ultimate protective armour for organisations and regulatory agencies to ensure systemic stability, greater inclusion, consumer protection in an ever more digital world. The data that we've collected by the RegTech Association takes in different perspectives that includes specifically from regulators and institutions, and has pointed to a remarkable increase in engagement by regulatory agencies towards RegTech and SupTech. 80% of regulators surveyed responded by saying that they'd adopted a solution in the last 12 months. Financial institutions are now very focused on their customers, in particular around their data and privacy. And with the growing number of fraud and scams, it's elevating and highlighting the need for greater technology to help in the fight against the bad actors. In fact, institutions have told us that their number one motivation to adopt RegTech is based on their customer expectations. So this puts RegTech and SupTech vendors in a very good position. They are experiencing growth in a difficult economic climate, but they've also been experienced improved capital flows. But scale and accessing the right markets is an ever-increasing challenge. But happily, this is where the RegTech Association has found its purpose by making programs like this available today, by making RegTech solutions accessible to the global market, by enabling access to customers that vendors would have no logical way to reach if it were not for our work in bringing the ecosystem of buyers and sellers together. So we're here today to elevate the conversation, and we are inviting you to lean in to participate. What a lineup that we have here for you today. Great speakers and a very exciting showcase of 3 RegTech startups on today's program that'll give us a bit of energy and help to give us a little bit of a peek about what's around the corner in RegTech product development. I'd also like to warmly thank our sponsors for their support of this program. Without them, we couldn't do what we do. And today we have about 18 different countries online, and many more will pick up the post-event recording. And speaking of recordings, I wanted to let you know that we are recording the session today, and it will be distributed to all registered delegates and made available via our YouTube channel. And while we won't have time for audience Q&A in this session because of the rapid fire nature of this online format, we are encouraging you to contribute via the chat if you would like to do so. And we'll also be doing some polling towards the end of proceedings today. This feedback is really important to us. We've designed the surveys so they're just a tick and flick, won't take you very long. We really value your feedback. Thank you. And you will have seen that Nathan is already putting in the chat some reports and other items of interest throughout proceedings. And please don't forget that our in-person networking event is happening in London next week, and we literally only have a small number of places left. You can register via the link that's in the chat. So it is my great pleasure now to introduce our keynote speaker, who is a leader in consumer advocacy, Faith Reynolds, the Director of Devonfields Consulting. Faith works in an advisory capacity across a number of consumer-related initiatives. She's a non-executive director at Fair for All Finance, which distributes dormant assets to grow financial inclusion in the UK. She's also an advisor to the board of TISA, where she chairs their consumer panel. She's also chair of the advisory board of the University of Nottingham's Inclusive Financial Technology Hub and the University of Birmingham's UK FinPlus network. Most recently, she was a non-executive for the payment systems regulator and a member of the Financial Services Consumer Panel. She was the independent consumer representative for open banking in the UK and is a leader in developing open banking and smart data in the United Kingdom. I am so delighted to have Faith join us. Over to you, Faith, and Nathan will move your slides for you. Thanks a lot.
So thank you very much. Thanks for the introduction, Deborah. It's really great to be here today. As you mentioned, I've got a few different sort of roles that I do, and I thought it might be useful to mention a few of these up front, just so that I can talk you through examples later and you're not kind of wondering what that is. So Deborah's already mentioned Fair for All Finance, which distributes dormant assets, and that's money that can't be connected with its owner. And we invest that in financial inclusion, and we do three things in particular. We invest in organisations, particularly community finance providers who are already serving people in vulnerable circumstances to help them grow and reach more customers. And we've already invested over 26.5 million in 35 organisations. We catalyse investment in developing new products and services and helping mainstream providers work better to serve our customer group. And we undertake research to inform policy and regulation to help people in vulnerable circumstances. And our goal is to create an accessible financial system that delivers the right products and services for everyone who needs them. I've just finished at the Payment Systems Regulator, which promotes, which seeks to ensure payment systems are operated in a way that promotes all the interests of business and users, promotes effective competition, and promotes development and innovation of payment systems. And prior to that, I was a consumer representative at Open Banking Limited, where we're looking at building the API standards and looking at how to ensure they were aligned to good consumer outcomes downstream, which is a bit challenging when you're looking at a technology set of standards and saying, what does this look like and how can we make sure we've got the right checks and balances in place? So I've been working with a startup called Amplify Global, uses AI and machine learning to simplify complex legal and regulatory communications and provides firms with an audit trail of their communications development and design for regulatory purposes. And I've been doing some research with them looking at how to increase effectiveness in communications and also modernise communications for a digital era. And those are some of the background of organisations I'm going to be drawing on. So I thought it might be useful to start with some definitions to set the scene. So financial inclusion and consumer financial wellbeing are intrinsically linked. At Fair for All Finance, we define financial inclusion as the environment within which individuals, regardless of their background, income or personal circumstances, are aware of and have timely access to appropriate and affordable financial products and services, which enable them to manage their finances day to day, build their long-term resilience and well-being, and participate in society. This allows and facilitates consumer well-being, where people feel secure and in control. They're able to make the most of their money day to day, deal with the unexpected, and are on track for a healthy financial future. They're financially resilient, confident, and empowered. So that's kind of what we're working towards. But in the UK and I suspect elsewhere, we know that it's not so straightforward. We can't just deliver that easily. And we're kind of interested at Fair for All Finance to really understanding what are the drivers of financial exclusion, so we can begin to unpick those and think about how we deliver better services. And you'll see our flower, which is our kind of financial exclusion flower, which is often used elsewhere as well, but just to kind of bring forward some of these drivers. And these include, as we've noted, a lack of access. Fair for All Finance found that around 17.5 million people in the UK are vulnerable and likely to struggle accessing services one way or another. Last year, we did some research on illegal money lending. We found that over 10 million people have borrowed from friends and family in the previous 12 months, and more than 3 million had used an illegal money lender. Access remains a challenge geographically as well, the closure of bank accounts. And we're in election mode at the moment, and one of the political parties is putting up one of its priorities, the delivery of banking hubs across the UK. And even as we move to digital, where you live still has an impact. Many people experience the poverty premium, which means that they're paying more for making payments. For people on a low or unstable income, it can be difficult to pay by direct debit and by regular payments because they just don't have that stability of income. And so they end up using more expensive types of payments like pay-as-you-go or the standard rate. Or for insurance, for instance, in the UK, we have a premium, which means that if you don't pay your insurance in one go at the beginning of the year, you're paying an additional credit premium for borrowing the money to pay for your insurance. And that's a real challenge, where car insurance is a legal requirement here in the UK, and it keeps going up because we have problems with potholes, for instance, and people are having to have more fixes to their cars. We have also squeezed incomes, and deficit budgets are growing in the UK. So we really see people struggling to make ends meet, with choices about whether to heat or eat, is what we say in the UK. Citizens Advice have suggested that in 2023 to 24, nearly 5 million people were living with a negative budget, and 2.35 million people more were cutting back on spending to unsafe levels. Nearly 9 million people in the UK experience debt, but too few are accessing help. We also see people from ethnic minority groups are much more likely to experience challenges that exacerbate financial exclusion, such as being in low-paid work, or less likely to be a homeowner, or less likely to own financial products that could help them build financial resilience. And added to this, Fair for All Finance's research also found that 1 in 5 people experience discrimination due to race when dealing with a financial services provider, which just demonstrates the importance of equity and diversity and inclusion in the workplace. We see low financial capability played out across the UK, and women, the whole half of our population, typically report lower financial confidence than men. Recent research that I've been undertaking with the Investing in Savings Alliance, so that's TISA, looked at people who are more likely to invest, and we found that the people who are more likely to invest tended to be men, people who lived in the southeast, and even after accounting for income, people of our highest AB socio-demographic. Also found that men were 8% more likely to think that investing was for people like you. And so this is where we see the power dynamics of institutions played out in such a way that some people just rule themselves out of products because they're not for people like me. And as we look to people's future, home ownership is a key determining factor of financial well-being. We have a 350 billion savings gap predicted by 2050. We have 59% of renters are struggling financially compared to 29% of people with a mortgage. And we have this unusual thing in the UK where 61% of the UK are homeowners, and that home ownership is a kind of key part also of planning for later life provision. So we've got a number of challenges in the UK, and that's obviously against a backdrop. Economically, we need to see increased productivity and growth, which speaks to that wider environment within which we're operating. So that gives you a bit of an idea of what we're looking at in the UK and some of the challenges we're facing. Now, obviously, we have the Financial Conduct Authority. They're here today too, and their strategic objectives to ensure that relevant markets work well, that it protects consumers and financial markets and promotes financial competition. But it doesn't have an objective or have regard to financial inclusion, which can create some challenges as to who's responsible for delivering financial inclusion here in the UK. So typically, the regulator seeks to use a variety of different tools to take action and access and inclusion into account. The most prominent of which at the moment is a consumer duty, which requires firms to act in good faith, avoid foreseeable harm, and enable and support consumers to pursue their financial objectives. It has 4 outcomes that relate specifically to that, which include the governance of products and services, price and value, consumer understanding, which I'll come back to later, and consumer support. And it also has guidance for firms in relation to consumer vulnerability, which ensures firms understand the needs of their target markets, that staff have the right training support, and that firms respond to customers' needs through flexible product design and communications, and some other aspects, which I'll come back to. So that's just the kind of setup, really. And I wanted to send the second half, we've just moved forward another slide, looking at some of the responses to the challenges we see and the typical debates and therefore opportunities that arise in the sector. So this slide is supposed to demonstrate something of a spectrum between the items on the left and the items on the right. There's no good or bad here, but rather an observation I've had, which is that often our debates about how to bring about financial inclusion or look after consumers often relate to these key themes. And we also see in the UK a strong focus on technology and innovation to solve for some of the challenges too, at both ends of the spectrum. And therefore, there are opportunities for RegTech here to be playing a part. So I'm just going to do a bit of a quick whip through, and I'm going to explain some of the examples that I've got on the way. So the first one, and probably the most important, is competition collaboration. Generally, in a competitive market, and what as a regulator I might have wanted to see when I was regulated, is that we see consumers being informed and educated so that they can enforce their market power. They are empowered and they are able to discipline the market so that low quality, high cost products are pushed out of the market, and the market works in the interest of those consumers who are shopping around. However, sometimes competition isn't enough and firms are not best placed to solve for challenges on their own. And that's where we see kind of discussions about where do we need more collaboration. And a particular example for this is collaboration around fraud and scams. Security, especially in this digital age, is a real priority for people on low incomes. In the UK, authorised push payment scams cost 459.7 million just last year. And the PSR has responded, the payment systems regulator, has responded by incentivising firms to work individually and together to reduce fraud. It's required them to implement a name checking service to reduce fraud, and also a reimbursement requirement, which helps incentivise firms to undertake fraud prevention so that the risk doesn't fall to the consumer. And so this has involved new standards and infrastructure for data sharing and communication mechanisms between firms, because both the sending and receiving firms each pay 50% of the reimbursement. One of the kind of foundational questions to the problem of stopping scams in the first place relates to how much consumers know or should know about what protection there is for each payment type. And this is a hot topic also for the introduction of new variable recurring payments, a kind of open banking payment, which kind of operates in a similar way to a direct debit. And much of the discussion is about the commercial model for VRPs, whether it requires a single industry approach or whether firms could be delivering their own bespoke APIs. What's the best way of getting the commercial model working? And at the heart of that discussion about the business model and about the commercial model is purchase protection in the event that something goes wrong. Do we need to have purchase protection on variable recurring payments for consumers? Can we expect them? Do they know what protection there is available on other payment types? Will they be able to kind of work out what they can use each payment for, where they've got protection, what they should use each payment type for? And I'll leave you to debate that yourselves. We see the same in other sectors where the cry is if just consumers would educate themselves, then they would understand that the insurance didn't cover their age group. The investment was actually high risk. I mean, the premium went up every year. When they were eligible for redress, they just never opted in. And in the past, we've seen kind of challenges with disclosure and whether that's really been effective in delivering the intended benefits. Behavioural science has obviously come to the fore, and there's a stronger focus on design. So what are the kind of focuses, sort of like, do we have disclosure on the one hand, or do we actually look much more closely at whether the products are being designed in the consumer's interests in the first place? And so this is where we have been focusing quite a bit of Fair for All Finance on what are the products that people actually need and want. What is attractive for them? And we've been looking at no interest loans. We learned quite a lot from Australia, and also looking at a new consolidation loan product. Underpinning that work is a real focus on what people need and find attractive. What's the size of loan over what period of time? How should they be able to access it, and on what terms? What kind of level of flexibility and control do they need? And design is really important in widening access to financial services. But on the other hand, disclosure is really important too, and more emphasis is being placed on how firms communicate and whether they're really conveying the full risks and benefits of products effectively. And I've been working with Amplify Global, as I mentioned earlier. We've been doing experimental research to see how communications affect consumers. One particularly relevant piece was with Step Change Debt Charity, where we found that key regulatory notices, like the default notice, which is something somebody gets sent as a kind of legal notice to say that they are in debt and action may be taken. That default notice, it's supposed to wake somebody up and get them to take action, get in touch with the provider, go and speak to a debt advisor, do something. But it's having this, the actual content of it creates a mixed message. On the one hand, it's threatening people, reminding them of their failure and eliciting anxiety. On the other hand, at the end of the way it's set out, it says, oh, and there's help here. It creates this mixed message and also gives people the impression that that offer of help isn't genuine. So we've been looking at how do we change language to create the right outcome downstream for consumers. If we want people to take action, then let's start with a message of help, not with a message of threat. But it also, sort of a default note is fairly straightforward. It's quite a short piece. We've also been working with the Investing and Savings Alliance, looking at digitising communications, and particularly how we can take long, lengthy documents, such as a key features document for a stocks and shares ISA, which is a basic tax-free investment product here in the UK, and then looking at how do we layer information, how do we kind of work out what information should be prominent, and then what else people need to know but can be less prominent. And that's been really fun. We've taken a document that's well over sort of 4,400 words. We've managed to squash it down to 592, stick it on some screens, and I'll try and make sure that that gets circulated so you can see the prototype of it afterwards. But in the middle of that, what we found is that it is a challenge for firms to know exactly, from a compliance point of view, information that must be prominent versus information that could be made less prominent on a click-through, because not every consumer clicks through, which means that not every consumer reads the additional information. Another particular finding from the research was the complexity of costs and charges. People did not understand them all, and it was really hard for people to kind of make that mental map with so many different costs and charges listed. We built a calculator, and that really helped people make sense of the costs and charges, because it just said, if you do this and this and this, and you can personalize that, then this is how much it will cost you. But behind the scenes with the industry, that led to conversations about, well, where do we need harmonization here? How can we simplify? Because it's really complex. And even after we spent a lot of time looking at it, it's still really complex. How do we simplify, harmonize information? So just the last kind of aspect here that I wanted to draw on was the importance of standards for data sharing. Obviously, open banking and open finance is close to my heart. And one of the things that it enables, which is really helpful in helping consumers navigate markets and also get better outcomes, is personalisation, when it's done right, obviously. and this is where we see people making trade-offs that are really challenging. Should I pay this bill or heat my home? What's the impact? Should I pay down my mortgage or put more into my pension? And so some of these trade-offs that people have to make aren't really very easy. They're quite challenging. And advice in the UK, we have a big advice gap because the advice is quite expensive. And so one of the things that's being looked at is a new regime to help people access more personalised information that doesn't actually constitute full advice. But open banking is a real kind of sort of like key for unlocking information that consumers can share safely with a third party to help them work out what does their financial situation look like, what might be the next best steps for them. And but one of the kind of underpinning parts of that, in that sort of like approach in the UK, which has made it work very well, is the mandation of data sharing and the development of standards for that data sharing, both governance for who's allowed to access the market and also for data sharing. And I think that's where it's been really hard outside of mandated and regulation to get the data sharing, because the incentives aren't there for the industry to share. And this, I guess, is where we come full circle, because standards can actually, although you collaborate to deliver them, open up new opportunities for competition. It's akin to a football playing field where the rules are set and the teams come and they compete for consumers. They don't spend time arguing about the size of the pitch, whether the white line should be painted blue or whether the goalpost should be moved to the other side. They come and they compete. And really, that's been the benefit of looking at a standards approach in the UK, which has been mandated, where data is made available in a safe way for consumers to share and to get more personalised services, although it does open up new challenges related to privacy and security. I'll finish up here just with a little bit of a summary, which is really that there is lots of real need for consumers. They have there are real challenges that they face, and a real need to reduce harm and improve sort of protection, but also opportunities to access products and services in a way that really meets their needs. There's opportunity available. And we see technology and innovation, whether that's through open banking standards, whether that's through data sharing, whether that's through kind of looking at using new technologies to sort of reduce fraud, lots of new ways in which technology and innovation and design can really sort of help solve for some of those challenges. And I guess that's hopefully set you up for your later discussions today, where you're looking at how is RegTech helping to protect the consumer. So that's me finished. Thank you.
Thanks very much, Faith. I just have one question before you go. We've got about 3 minutes left before we have to go to our next panel because one of our speakers needs to get on a plane. But you spoke of, resilience and empowered consumers, getting safe access to money. What are some of the challenges that you see are there for firms implementing new technology to solve, some of the challenges that you spoke of?
So I think, so some of the things that we see that come up a lot in kind of conversations when we're looking at new technologies, whether that's things like kind of open banking, variable recurring payments, things like business models. Can we create the new business models that would facilitate us to use this new technology? Do we have the right incentives in place for firms to want to innovate and want to adopt? So I think there's a kind of key part first is, do we have the right incentives and business models to enable these products to come to market? I think the other part is actually that comes down to quite often this challenge of risk and liability sharing. And I think we see that in, say, for the adoption of AI, large language models, for instance. We've got all of this potential, but how do we bring that through and adopt that and deliver that in a highly regulated market where we need to be super aware of the downstream impact and the negative impact it could have? So I think there's also this challenge of sort of risk and liability and how that's managed. And then this kind of relates to compliance. So I think there's a sort of overall sort of challenge with new technologies of how do we get them to a point where we can see the potential, but we can implement them in a way that is safe and works well for the market.
Well done. Thank you very much for joining us, Faith, and I'm looking forward to meeting you in person next week in London. Really appreciate you taking the time to set us up for the rest of the session. Thank you so much.
And thanks a lot. It's been great to be here.
Excellent. Thank you. So now it's my pleasure to introduce you to Mark Sheed from VMEG. Mark is the Head of Regulatory Innovation at VMEG, working in the product SLT team to support a future-fit agile reporting platform while supporting across global sales and their marketing teams. Mark has over 20 years of experience in delivering technical change, and the last 13 years of which he's spent in RegTech. So you must be one of the grandfathers of RegTech, Mark, I think.
Yeah, Mark
yes, indeed. Mark first started out in RegTech, leading the harmonised reporting program for the Financial Conduct Authority and with the Bank of England. I'm going to throw to you, Mark, and you are going to run this panel on what are customers of RegTech think. Over to you.
Good morning, everyone. Great to be here today, and also to be joined by some esteemed speakers and industry experts, including both the FCA and an ECB. Deborah, in your opening speech and from the recent findings, you mentioned some of the things like cyber and Gen AI and financial crime that were keeping the regulators awake at night. Perhaps we'll touch on those when we hear from the FCA and ECB shortly. But first, I wanted to call out a couple of other points that your recent paper found and kind of relate those back to what we're seeing in the reporting space. So in the paper, I think institutions cited that their appetite for RegTech is now being driven from customer demand, that their budget for RegTech is highly likely to increase, and also that 80% of regulators have onboarded a RegTech or SupTech solution in the last 12 months, with a big shift in engagement, where the vendors are reporting increased levels of engagement from the firms themselves. And so just wanted to bring some of our experience really at VMEG, because I think, we really back those findings, certainly in the context of reporting. We're seeing an increased number of firms that are looking to improve their reg reporting, whether that be the data capabilities or more basic aspects such as processes and controls. But we're also seeing a clear shift to firms looking to automate the entire end-to-end process from data sourcing through the calculations and through to the reports that they submit. And that's a trend that we expect to grow considerably in coming years. We see consolidation of what have previously been point solutions across that chain, moving more and more towards end-to-end reporting providers like ourselves. The other trend that we see is the shift to a more data-centric focus on reporting. Reg reporting is no longer just an output solely to meet the requirements of regulators, but it's increasingly moving front and central within the banks to steer the business. And that isn't just on the regulatory data as sort of template or output level, but also on the input level of data or granular data, as it's often referred to. If you look at the drivers for these, I think there's no question that these trends are, at least in part being driven with the recognition that improvements in these areas support systemic stability. You only have to look back at the PRA's Dear CEO letter earlier this year, for evidence of this. And I can kind of quote from it that they said that the submission of complete, timely and accurate regulatory returns remains the foundation of effective supervision, and that the PRA will focus on identified deficiencies over data, governance systems and production controls related to regulatory reporting. In addition to that, we also see globally now a trend by the regulators to actually collect that underlying granular data that I mentioned in parallel to the traditional returns, because they also recognise the value that receiving that data can have in supporting effective supervision, and they in turn are becoming much more data driven. There's a lot of examples around the world of programs that are ongoing in efforts around granular data reporting. Hong Kong, we have clients live over there on their GDR program. Australia have got their 5-year plan. You've got the ECB with IRF and BIRD, and closer to home, the TDC program in the UK. The other driver, though, is the sort of focus on the cost of reporting. Obviously, with things like automation, there are clear savings to be had. We also see a trend, moving towards SaaS solutions, outsourcing, the hosting and the maintenance of solutions, and of course, sort of the processing of the data. And on that point, I'd probably add that controls and governance are very high on firms' requirements. We provide our SaaS solution as a SOC 2 Type 2 certified solution, it's kind of gold standard effectively in things like data processing and controls, and that's something that we're seeing increasingly valued by the clients. So you could be cynical perhaps about where those cost savings go, but I think the overarching message is that banking is not getting less competitive. And we believe that ultimately that reduced cost of compliance is something that can end up benefiting the end consumer. These are just my thoughts, and I'm here to introduce a panel. I'm delighted to be joined today with 3 speakers with an enormous amount of experience across RegTech and SupTech, both from the perspectives of regulators and the regulated. So perhaps without any further delay, I'll cast that net a little wider and go over to them to hear their thoughts. Let's start with the FCA, and Jasmine, could you tell us a little bit more about your role at the FCA and current priorities?
Absolutely. So hi, everyone. Thank you so much for having me. Thank you, Mark, for the introduction. And thank you also, Deborah Young, for your kind invitation to speak today. My name is Jasmine De Freitas, and I manage the Financial Conduct Authority's RegTech and SupTech team within our innovation department. Just to touch briefly on my background before getting into a bit more on the role and the team's priorities. I've been at the regulator for about 6 years. Throughout that time, I've been in the innovation function, initially working on our policy stroke engagement function, where I led a lot of our international engagement with peer regulators on innovation, including Global Financial Innovation Network, or GFIN. And from that role, I moved into RegTech and SupTech, which is the team I now lead. So what do we do as a team? My team leads on research, engagement, and collaboration across regulatory technologies and supervisory technologies to inform FCA activities and enable compliance innovation in the market. So a really high-level strapline. What does that look like in terms of objectives and priorities? And there are 3 things that really underpin this. First is about supporting adoption of RegTech in the UK financial services market. And I think I'll be able to unpack that a little bit more in some of the subsequent questions. Second, it's about shaping the FCA's supervisory and policy perspectives on RegTech and its usage. And then finally, enhancing the development of internal SupTech approaches. And this is done through things like bringing in external learnings, whether that's from our peer regulators through initiatives like GFIN or otherwise, or what we like to call the RegTech and SupTech bridge, which is essentially about leveraging industry use cases or RegTech for our own internal SupTech development.
Thanks, Jasmine. And given some of the insights that were just shared, do you think this reflects your experience at the FCA, that there's a clear appetite and interest in RegTech to aid the mandate for market integrity and things like consumer protection?
Yeah, absolutely. I mean, as an organization, we are strongly supportive of RegTech because we believe in the potential for technology to streamline regulatory activity and bring these benefits that have been highlighted already a lot this morning to financial institutions while improving outcomes for consumers and the wider industry. Just in the previous answer, I highlighted that one of our main priorities is about being proactive in our support of RegTech adoption and solution development. And that manifests in a couple of different ways across our work in the innovation department. But I think I'll just touch just now on our tech sprint program. So the tech sprint program is an initiative that started within the FCA RegTech team, and it's now grown to such a size and scale that it has its own dedicated function within innovation. In addition to also being a model that is, replicated around the world by regulators and other organizations. Tech sprints are fundamentally about harnessing the energy and creativity of the tech sector to be able to support RegTech solutions to address industry challenges. So just to highlight a couple of the current ones, financial abuse, market inclusion. And these are, of course, done in support of our mandates for market integrity and consumer protection. We've actually just concluded a tech sprint on financial inclusion, where one of the problem statements was asking participants to build solutions, answering the question of how technology, including AI, can be deployed to ensure that firms deliver good outcomes to groups of consumers that have been either excluded or not well served in the past, particularly in retail banking, payments, credit, and insurance. And then our live tech sprint at the moment is a 3-month cohort-based sprint designed to explore AI-powered solutions that are helping to detect evolving models of market abuse. And here we're particularly interested in seeing how AI can help accurately identify more complex types of market abuse that are currently difficult to detect, such as cross-market manipulation. So I think even just within that tech sprint program, and we can come on to other things that we're doing as well, that really for me signals, and hopefully signals to the market, that really strong interest and appetite to engage with RegTechs.
Yeah, absolutely. I think I can first-hand experience of having been involved in some of those activities that you've been doing. They've been applauded globally and have kind of led the way really for other regulators, as you say. Interested to see the most current one being 3 months long. I wonder when a tech sprint becomes a tech jog or a tech marathon, but we'll come back to that. Could you tell us maybe some of the ways that, I mentioned around the switch with regulators now being a little bit more data-driven and data-focused. Could you perhaps tell us some of the ways that the FCA is seeking to be a data-driven regulator, and also perhaps kind of how innovation kind of typically comes over to you?
Yeah, definitely. I mean, I think first, I don't know if tech marathon's going to catch on. I don't know how many people want to train and do a marathon, but maybe. So on how we are seeking to be a data-driven regulator. So I think this is sort of a good time to sort of talk about what some of the SupTech work looks like at the FCA, and then circling back into RegTech as well. And you called it out actually, Mark, in your intro remarks as well. So one of the major SupTech projects being led out of the Data Tech and Innovation Division at the FCA is the Transforming Data Collection, or TDC project, where we're working together with the Bank of England and also with industry to improve the data collection process for both regulators and firms. And the joint program here will deliver improvements to existing data collections, including cuts to templates that may not be needed, or improving processes where information could be more easily gathered elsewhere. We are planning improvements to internal processes for creating new data collections, as well as upgrades to systems that support data collection, and are also launching a number of projects that are going to make it easier for firms to meet our reporting obligations, including investigating options for delivering a unified interface for firms to interact with FCA systems, and a firm communications portal that will be at the bank. I think SupTech here, facilitates seamless communication, hopefully, between regulators and financial institutions through these new integrated platforms, enhanced transparency, and of course the collaboration across those sort of 3 different pieces. If I can sort of pivot back into RegTech then, to answer kind of the other half of the question about how innovation comes into us, and particularly, I guess, how it comes into my team. A lot of my team's day-to-day work involves regular engagement with RegTech vendors themselves. So that's, hearing demos, engaging with solutions, and through this engagement, we gather insights about the RegTech landscape and the new solutions that are being developed by and for industry. Through that work, we're able to learn about trends in the market, and what we're doing is trying to be able to assess best practice in regulatory technology development. And by doing that, I think that we're then able to better educate the supervisors and policymakers within my organization, and give them that better understanding about how firms are actually complying with our regulation through the use of RegTech, which will then hopefully make us both better supervisors, as well as, ideally, from my perspective at least, declaring a personal interest, having an impact on levels of adoption. And then finally, if I can, just to plug some of my wider colleagues' work within our broader innovation department, we have several innovation services such as the Digital Sandbox, the Regulatory Sandbox, and Innovation Pathways Services that offer support to RegTechs as well as fintech, actually, at different stages of their development. And I'd really encourage interested RegTechs on the call to check out our website or get in touch with me or my team directly to discuss how we might be able to support.
Thanks, Jasmine. That sounds all very, very exciting. Lots of good things coming down the pipeline, I think, out of your team and across the PRA and Bank of England as well. Switching gears a little, let's now maybe go over to our next speaker, who I know has a wealth of experience in RegTech, SupTech, tech sprints, and also from the perspective of a regulated institution. Adriana, could you introduce yourself and why you're interested in RegTech? Oh, I think you're on mute.
Yeah, sorry. Yeah, my least favorite word of the last few years. Hi, everybody. Thank you for having me, and it's great to be on this excellent panel. So Adriana Enab, and my most recent role, I was at Credit Suisse for 10 years, covering in public policy, covering digital topics. RegTech was something that sort of came along afterwards. It wasn't a particular topic to lobby on or to get involved in from the beginning, but one of the first things that I focused on was that the FCA had this competition mandate, I think, that was handed to them by Osborne, and they decided, I think, with Chris Willard as leader, to bring together to the table the fintechs or the regtechs, the institutions, and the regulator to try and find solutions, and which is when the sandbox started, plus the tech sprint. So there were a whole bunch of different things that were brought on to try and facilitate this. I think it was incredibly groundbreaking. And when I spoke at conferences, when I started sort of about 2015, I think people thought that the FCA was actually paying me or part-time employing me, because I kept on saying how groundbreaking this was, having been in the market years ago, when you just never really sat at the table with the regulator because it was, they were just supervisory. This was unbelievable what was happening, that you could sit at a table together with other institutions and try and come up with solutions that worked. And, for me, I kept trying to explain to everyone that, that compliance, there isn't a competitive advantage in working on this together. You might have a nanosecond, but really this is something that we should all be doing as a group. And the FCA was facilitating that. I think that they really shifted the move globally after the FCA's work. The U.S. regulators at that point didn't speak to each other, and then others that that followed were Australia, Singapore, Hong Kong, and then obviously the US with Chris Giancarlo at the CFTC with that innovation lab there. Things started to move a little bit, but it was incredibly important not for us to be building solutions on our own, because these things need to interoperate and to be interoperable and work together. So I remember sort of stalking Paul and Chris at the FCA, wanting to get onto the first wholesale RegTech, which was in unlocking reg reporting. I think the first one was financial inclusion, and if I recall correctly, that was in 2014, yep. if I recall correctly, there were the solutions that came up. There were 5 million people that were vulnerable and didn't have access to banking at that point. And at the end of that, with the solutions that were proposed, 1 million would find their way into banking with ease. So, that to me was really an unbelievable number of what you could do working together. The next one was in reporting, and I think that the last numbers that we heard, and I know that someone is working on this. I think Mark, we talked about this yesterday on the new numbers, was something like $4 billion or £4 billion that was spent on reporting. So if you talk to the individual banks, it wasn't an imminent problem that they realized, you didn't have the resources to put into finding new solutions. And you didn't really understand that this cost that was being drained. We were sending out information that wasn't necessary. We were being asked for things that wasn't necessary. It was a waste of resources, of data, of time, and often incorrect. So we needed to look at how do we move forward. So this was the first step, and that was an amazing 2-day tech sprint where we brought in different people from different parts, even within our organization. We said, okay, well, that's great. We're done with this now. Where do we move? How do we move forward? So then the next thing was the MDMR, which is, I can't even remember what it stands anymore, but that was with the Bank of England. The machine.
No, I was going to say model-driven machine execution.
That's the one, exactly. And that was the first, that was a 2-week sort of sprint-ish, where the FCA and the Bank of England worked together. And then from there were all sorts of roundtables on governance and bringing in different parts of the organizations, the legal things. And I remember the bank, the Central Bank of Ireland got involved as well, trying to work together. And then that moved to digital reporting. And, we put resources into that. There were, I think, six institutions. And when we had some of our senior managers come in from New York, they went over at that point. We were working at Fuse. They very kindly gave us their space. They couldn't believe, they had no idea what bank, who belonged to what bank. It didn't make any difference. Everybody was working together to find a solution for the market. And I think that was incredibly important to help reduce risk, to streamline, to reduce costs, and to reduce the use, the waste of data. So we also participated in AI, and again with these for money laundering and terrorist financing. Again, these are things that are cross-border. These are across regions, governments, global. So that tech sprint was with the US as well, and with regulators from around the world. So that was incredibly interesting. There is still, and I think you find in some countries in the EU, there's this protectionist perspective of we need to build our own things, we need to do our own things. There is no point in doing that. In the FCA, Bank of England really showed us the way to move forward. When this sandbox first opened, there were 7 criteria for you to participate in, and one was you had to be ready at the end of the 6 months to go live, and the other one was that there had to be a direct benefit for consumers. And in the discussions that we had with the FCA was, RegTech didn't really fall into that because there wasn't a direct, this wasn't like a payment or whatever. But then after time, we said it is a benefit to the consumer, because if we reduce our costs, if we can streamline, if we can do all of these things, then that means the consumer is going to benefit. There, be less fraud. And so I think that's when, quite a lot of RegTech solutions started to come. And then of course we moved on, and there was also moved on, continued to do that. But during COVID, we had, women in financial, we found that they were the ones that were most affected by COVID on financial. There were people that were being abused, that they didn't have access to finances, that they couldn't work, and they were trying to support a family. So that was finding solutions to help vulnerable women in this situation. And we thought one of the things that we also wanted to do was get more girls involved in technology and in coding. So we said, why don't we have running parallel girls who code? And so I was on the on the judges panel, that I have to tell you, I think that their solutions were even better. The stuff they came up with, the stuff that people come up with together working as a team, absolutely unbelievably beneficial. So we sit there and we see this and we know how incredibly important it is for us to work together and move this forward. And yet what happens is then everybody sort of goes back to their office and to their desk, and kind of it gets dropped, or trying to explain to management when there are so many there's so much competition for resources and for funding, in difficult environments, that you're like, what, we don't actually need to do anything right now, we'll leave it, it's okay. But thank God we were lucky here because we had the FCA and the Bank of England. That's a much easier sell if you say, our regulators are sitting at the table with us. So they obviously really believe that. And then Andrew Bailey and Hammonds, and they all said, we are investing money into this. We're going to put money into the digitizing reporting, which, I guess now the subtract of that is the transforming data collection. But incredibly important. And we're so lucky and that we have, and then of course the GFIN, where we could trial these things out cross-border. That we have, sort of these regulators here that believe in it. And I guess there are some things that we still need to do, which is potentially, have sort of a list of one of those, when you have trades, builders or whatever else that are tick marks that, yes, these have passed approval. But I think that's something going forward. Maybe Yasmin can talk about that later. She's smiling.
Yeah, it's certainly a topic that keeps rearing its head. But I think you mentioned there about, the tech sprints and, involved in those as well. So, I look back on those very fondly, and almost a big catalyst moment, I think, and would agree with you on, for the entire RegTech industry, really. Although they were a big driving force, but maybe you could help us kind of unpack a little bit, sort of from your experience, what the actual financial organizations might be thinking in regards to their RegTech adoption strategies, and perhaps any kind of pearls of inspiration for the RegTechs that are in the room today.
You're asking me? Yes. Right.
I was, yes.
One of the things I was always asked speaking at conferences is, what can we do to get institutions like yours to bring us on board? And, to be honest, although my role was advocacy and policy on digital topics, not this sort of partnership with RegTechs, because I went to a lot of the conferences and met a lot and saw solutions, I would bring them in and say, look, you guys, I think that this would be incredibly useful for us. And again, it's fighting that, do we need to spend money on this? Do we know if this will work? Do we know if they're going to be around in order to, continue to provide this solution? And there were a couple of things that I suggested, which is, if you bring us a solution that solves for one small problem in a regulation, that's just not going to be helpful. So it should be something that can be leveraged across the firm. And what was helpful was RegTechs that then had either on their board or were building these platform solutions, whatever it was, that understood how the institutions worked internally, because otherwise it makes it very difficult to provide something. So leveraging that, and I think that a lot of it can. Also, something that you could at the beginning, it was almost having to replace the legacy systems. How did we integrate that into the legacy systems that we have? And so over time, we found that now the RegTechs adapted, and it was something that you could layer over it, so you didn't need to rebuild. I mean, ideally, in my perfect world, was that we build, alongside of our legacy systems, this whole new, market and a whole new systems for us, the banks. And then we moved over one day, and that was it. The legacy systems were all gone, but that was never going to happen. So the other issue is the onboarding. It's complicated, it's long, it's costly, and I think a lot of the banks just don't want to spend the time doing that. And I think they don't know who this RegTech is. They don't know what the risk is associated with it. They don't know how long they're going to be around. This was sort of the beginning when it was a little bit more kind of newer. And one of the things that I had suggested is that we had an agile or a different sort of group that dealt with these things that were lower risk. So, you had legal and compliance and different. So instead of going through the whole new product rails that we would do, that you could do this in a much quicker way. So again, and then also doing something, if you could connect the different RegTechs together, if they didn't, that could, you could plug them and plug and play, that from beginning to end you had a solution. So it would be a little bit like the banks working together, because there wasn't any competitive advantage for the RegTechs to do that. And I understand they're trying to sell their solution, but if your solution only solves for one problem and their solution solves for another one, putting those two together would make life better for both. So that some of the things that I think would help.
No, I couldn't agree more on that. And I think there's been a lot of efforts coming out, off the back of some of the tech sprints around that kind of integration aspect. I see I'm being prompted on a time check from Deborah on the chat, so I'll, if you don't mind, I'll switch over now to Theo from the ECB. Theo, could you just give us a quick introduction about your role and remit at the ECB, please?
Yes, so hi everyone, very happy to be here and thank you for inviting me. I'm replacing actually in the agenda, it's a colleague, Harun, who was not able to attend. I'm Theodore Mastrokostopoulos and I work in the supervisory technology section here in the single supervisory mechanism. This is part of the technology and innovation division. And we're basically involved in, let's say, providing solutions using technology that would facilitate and make supervisors more effective and efficient in their day-to-day work. Just for those of you who may not know, so the SSM is basically the supervisory arm of the ECB, and its main focus is prudential supervision for a number of significant institutions. So market conduct authorities or anti-money laundering and so on, they are part still of national supervisors, or they're part of the different jurisdictions that we have. So, I mean, it's very nice to hear, what also the other speakers were saying, but as usual, in the EU, things are a bit more complicated. So it's not really straightforward to have one conduct authority and then, all the RegTech and the institutions coming together. Now you need to collaborate amongst, a number of 20 or 30 or even more local supervisors and regulators. But I concur with a lot of what is being said. I think this is an important topic, and there are several initiatives going into this direction as well here in the EU area.
Yeah, and maybe just on that point then, Theo, were you surprised by the research from RTA that indicated that regulators and central banks and so on are ramping up their RegTech and SupTech efforts? And, is there anything you can share that supports that?
Yes, no, not at all. I mean, I think there is a real need, particularly for us to streamline reporting. So you see that some of the information needs to be reported into the same information could be reported into a different context to different supervisors or regulators. So there's a real need for that. There is let's say a logarithmic expansion in data points and information across the board. And we can only make sense of that if we use technology. So there's a lot of effort also being put in SupTech. And there are also a number of new risks that we have to address. So climate risk, for instance, being or IT cybersecurity risk. So these are things that you can only do and make sense of them using technology, because they go, let's say, beyond the traditional reporting frameworks that we have in place. And I see also that in your agenda following this item, there are a couple of very interesting presentations specifically on this topic. So here at the ECB, we started like a supervisory technology program a few years ago, and we've tried to invest heavily in creating some tools that would allow supervisors to make sense of all this data. So one of these was creating, let's say, a common data lake where you would have access to all the necessary information, and that brought in, let's say, not only the prudential information, but also from across different sources. And then what was also key was having a tool that would be able to go through, let's say, unstructured information, because a lot of the things that supervisors have to deal with have to do with reports and so on. So we created, let's say, some search, but also using natural language processing tools that would allow you to, to search through documents, to summarize, to find the key elements that you are looking for, to categorize documents, and so on. And then on let's say on the RegTech side, there are, but this is mainly from a different business area. This is the colleagues in statistics who are looking mainly into this. There are also, let's say, EU-wide initiatives such as the IREF, which is the Integrated Reporting Framework, that will try to streamline some of these requirements.
Thanks, Theo. Yeah, I think interesting you mentioned IREF as well. Although it doesn't impact us over in the UK, certainly very excited around that from a sort of European business perspective.
I just say one thing. Just that the ECB, once we did all this with the FCA and Bank of England, the ECB was always at the table with us. Well, from the early on, with Francis was always involved in a lot of this RegTech stuff, so they understood the importance of it. Getting the Europe together to do something was a different story, but the ECB always understood the importance of it. Sorry, just my 2 cents.
No, I completely agree on that. Something we haven't heard mentioned yet is around Gen AI, and it wouldn't be remiss if we closed out without talking around that. So maybe Theo, are you seeing Gen AI as a game changer, for compliance and risk managers, or is it something you're approaching with caution over there?
Well, actually, I think this will be extremely useful because, as I said, supervisors deal with a lot of unstructured information. So we are already planning and are going to roll out, let's say, in the coming weeks, also large language models in some of these tools. So using a large language model, you will be able to, let's say, chat with your document and be able to find the information a lot quicker. So I think it's something that will definitely support and make the work of day-to-day supervisors more effective. Having said that, I'm not sure that we're at the stage yet where you can say this is going to change the way supervision is conducted, or you can go with supervisors overall. But I think this is a valuable tool.
Yeah, no, I totally agree. Yeah. In the interest of time, just maybe one very quick question to each of the panelists just to close out. Maybe starting with you, Jasmine. I'll ask the same question to all of you. But what do you see as the most significant opportunity for RegTech and for customers of RegTech and SupTech in the future? And maybe is there anything specific that you'd like to call out to the RTA to do more of?
Yeah, absolutely.
Jasmine, we'll start with you. Cool.
Yeah. And if I can, I'm going to be a bit selfish about this one. So I'm going to say regulatory attention. And what I mean by that is it's been highlighted a few times, and I'll swear, Adriana, you were not paid to plug the FCA so much, but very grateful for all those plugs. But I mean, as it's been called out, and as the research from RTA has shown, there's never been more regulatory focus and attention on RegTech. And I can definitely sort of tell you from the inside that, that is true and continues to be true, which links to what I would like to see RTA members sort of doing more of. And what that is coming to us. So come to me, come to the FCA, show us what you're working on. In particular, I'll call it a couple of areas of interest for us over the next year or so. So bring us uses of AI that are helping regulated firms fulfill relevant regulatory obligation, solutions in the fin crime space, and then, very tied to today's conversation and today's theme, solutions related to financial inclusion and digital ID, as well as solutions in the open finance space. So if you've got a solution that can demonstrate the possibility of harnessing RegTech, not just for cost efficiency, which is of course important, but also solutions that are directly tied to driving better consumer outcomes, that will really get my team and wider FCA colleagues excited about RegTech. Thank you.
There you go. An open invite. Adriana?
I have to say, I agree with Yasmin. It's sort of how can we come up with something that will find solutions for financial inclusion, for consumer protection, for streamlining, obviously for a reduction in costs, because if there's a reduction, if we can prove that the bottom line is improved, then you will have more interest, obviously, from the institutions. But that you can use all of these things together, because I think that one doesn't work without the other. So, for instance, digital identities are unbelievably important. It's something that I've been pushing for years, even though we didn't have retail in the UK. That's the underlying, to everything else. I think for money laundering, for terrorist financing, for cybersecurity protection, for all of that, interoperable globally. But and then you put that with AI, with the blockchain, you put all this together. So how do we find solutions that work together? One does not work without the other. Well, they do for different things, but together, the power of that is unbelievably important. So I really just suggest and hope that we can continue to work as an industry and not put up walls and become protectionist, because it is unbelievably important for the future. And we should be making our money doing something, once we have that in place and, the environment is safe, then we make money by offering better solutions to our individual clients.
Yeah, totally agree. And Theo, finally.
Yeah, so I agree with these points. What I would add also is solutions that would look into some of these new risks that we mentioned. So climate risk, IT, cybersecurity. There seems to be a lack of reliable sources there. So anything that would go into that direction would be extremely valuable, I think, in the future.
A whole new set of use cases. Thank you, everybody, for joining us today. It's been great. I'm sure we could talk for ages about RegTech and SupTech by the sounds of it, but I'm very conscious of the time. And apologies, Deborah, I know we've run over slightly, but I will stop talking and hand back to you now.
Thank you so much. That was such a fantastic panel. I wanted to interrupt you about 50 times and say, yes, I agree. Good news is we are recording this, and so I will go back over it, and I could be reaching out to you before you know it. So I am urging you to stay with us, because if you thought all of that was exciting, we're about to even have some more excitement. At our association, we support early stage RegTech companies by giving them a platform to raise awareness of their fantastic solutions that they've developed and ones that they're looking to expand into new markets with. I'd now like to introduce Tom Merriman from Gung Ho Marketing to the virtual podium. Gung Ho are a partner of ours for this series. I'm going to hand to Tom to introduce the startups in turn. Each startup has 5 minutes to present. Tom will keep time. And if his face appears on the screen, the speaker will know that there's 30 seconds left. Please give them a virtual clap, or if you can work out where the thing is on Teams, please do the clapping motion. This isn't easy to be under pressure for 5 minutes to get all your points across. But do reach out to them if you see something of interest to you. If you don't know how to find them, contact us and we'll put you in touch. I'm going to hand now to you, Tom. Thank you very much.
Thank you very much, Deborah. I'll keep it very brief and get the introductions underway. So I'm Tom. I'm from Gung Ho Marketing. So we are a global revenue pipeline generating firm. So we specialize in risk and compliance, and we've built out a database of over 600,000 now risk and compliance decision makers worldwide. And our job is to connect you to it. So if you want to ask me any questions about that, please do. But that's not what I'm here for. I'm here to introduce everybody else. So let's go through it. So I'm pleased to bring you 3 RegTech startups who are about to inspire you. This program is really important, part of what we aim to do in accelerating adoption of RegTech. We need to raise awareness of companies solving the greatest challenges and burdens in compliance. This will showcase the versatility of RegTech. So I'll now introduce each of them one by one, and they'll give you a short 5-minute presentation. And as Deborah says, please do reach out to them if you'd like to connect. So first up, we have Gordon from Gaia Lens.
Hi everyone, I'm Gordon. I'm the CEO and co-founder of Gaia Lens. We are an AI-powered sustainability analytics platform for institutional investors and financial services companies. Our platform acts as a digital ESG analyst team, which automates ESG workflows, such as reporting, and saves our clients a significant amount of time. We launched the product in August 2022, and we already have over 15 clients, including asset managers, asset owners, and a global financial services company as well. So today I wanted to show 3 use cases of our platform. The first one is portfolio benchmarking. We make it really easy for our users to upload all of their portfolios or funds. They can then select a benchmark and within seconds get to step 3, where they can see whether their portfolio is over or underperforming the benchmark. In this screenshot, we are showing our own GuideLens ESG scores, and we have our own proprietary ESG scores, which we calculate for over 20,000 companies every day. Our scores are real time, they're fully explainable and objective, meaning data driven. The second part to our portfolio benchmarking is mapping sustainability frameworks. So our users can instantly generate sustainability reports with respect to any framework of their choosing in either PDF format or Excel. Just looking at the SFDR, which is a European framework, it requires investors to report on over 50 different metrics at the portfolio level. And our clients spend on average over 20 hours of manual work to create an SFDR report for just one portfolio or fund, compared to using our platform, which creates it in seconds. Through using our automated end-to-end SFDR reporting solution, one of our clients, who's a mid-sized European asset manager, saved over 2,000 hours of manual work per year and saved money by not having to hire additional ESG analysts. Moving on to the second use case, which is portfolio controversy detection. We have a best-in-class news processing system, which involves applying a sophisticated large language model to articles and tweets. The LLM generates controversy scores for the ESG pillars and a greenwashing controversy score. And then users can also subscribe to our controversy detection system, which will alert them when there is a controversy affecting their holdings. And in the screenshot, there's an example of an email they receive on a daily basis. Users can upload as many portfolios and funds as they want to, and they will receive just one email a day summarizing the high-risk controversies across all of their investments. So moving on to the third and final use case, which is greenwashing risk assessment. We can combine the portfolio benchmarking and controversy detection workflows to assess the greenwashing risk of a portfolio or a fund. If a fund is labeled as a sustainable fund, the investments must be aligned to its sustainability goals. Mitigated greenwashing risk has become increasingly important in the last couple of years, with some prominent asset managers being accused of greenwashing by regulators. For this example, we've loaded up a popular climate-focused fund, which is from a large asset manager. And you can see on step 1 that there's no red flags raised as the fund is largely in line with the benchmark. But as we get to step 2, you can see that there are some numbers in red with respect to the climate metrics from the TCFD framework. And this raises a red flag because this is supposed to be a climate-focused fund, and we're using a generic market index as a comparator benchmark. Step 3, there's also another red flag as our controversy detection system has picked up controversies surrounding this company, Next Era Energy, which is an American energy company. And this is actually the biggest holding in the fund. And our LLM has picked up that there's an article saying that this company is actually supporting fossil fuel projects and campaigning against renewables in Florida, so contradicting the aim of the fund. And this is actually an award-winning solution since the FCA gave us 2 awards at the end of last year for our greenwashing analytics solution as part of a tech sprint we did with them. Just quickly finishing off with our last slide, I wanted to summarize by explaining how different we are compared to the legacy ESG providers out there. So we take a completely different approach to their traditional analyst-based, research-driven approach. We take a purely quantitative approach to ESG, which means that we are good value for money. Our data and our analytics are real time. We have a big focus on transparency throughout our platform and explainability, and we have customizability built into our platform as well. That's all that I wanted to present to you guys today. Thank you for listening, and please get in touch if you'd like to find out more.
Brilliant. Thank you very much indeed, Gordon. That was fascinating. I'm now going to hand over to Fiona from Assuredly.
Hi, everyone. So I spent 17 years in big banks designing and leading banking security and GRC teams, and I was also the head of cybercrime in a large data bureau before building a cybersecurity consulting business about 8 years ago. And so what happened was my team and I are now out there building great security governance in other industries that support the more regulated industries and down and across the supply chain. And that's when I continued to notice one thing over and over again, that as bigger companies increase their governance, the reality is they don't operate in a vacuum, and they're surrounded by smaller and medium businesses who are increasingly becoming the backbones to many of their end-to-end services. And these companies were and are struggling under the weight of not only the compliance expectations, but increasingly using high-risk technologies, or they're under-resourced with security and GRC expertise, and the threats are infiltrating through them. So now I'll ask you to put yourself in these companies' shoes for 30 seconds and imagine being asked the same question day in, day out. That's what our business owners and risk managers in these small and medium businesses are experiencing. They're being sent a huge number of questionnaires from large companies that are unwieldy and intrusive, and although sent for good reasons, they just don't know how to answer them. So these businesses have a lot of security questionnaires. It's repetitive. It costs them a lot of money. And take, for example, one of the clients I was working with received 4,500 unique questions and were asked in no less than 104 different ways how they conduct user access reviews. They don't have the maturity to do their own risk modelling or explain why they do and don't have certain controls in place. For advisors, they've got, and advisors are MSPs and consultants. So MSPs who are looked to by many of the small and medium businesses to have security in place, and there's limited knowledge of who's actually owning the controls. They've also got a lack of skilled resources. Even the consulting firms have a certain set of standards that they will apply. There's inconsistent outcomes and a lot of shelfware reports when it comes to security consulting. So designed and developed by a team of amazing women in security, assuredly it's been built to empower businesses regardless of their size to evaluate their cybersecurity resilience against a range of security standards and also the new AI standards, while importantly ensuring they manage their real risks and using this same work to support them being able to explain how they secure their business to others when required. So I'm going to give you a little snapshot of what the tool looks like, what the platform looks like for business owners. You can assess your security controls. You can see a bunch of little pictures there on the left. That's basically you assessing your security control in your business. You're offered a range. You can pick any of the standards, the major securities and AI standards, and you can assess your controls. And while you're doing that, we're giving you automated actions. If you're missing something, we're also you're allowing you to add evidence and giving you practical tools and templates while you're actually thinking about that control. And this includes letting you know what auditor is going to be looking for, what evidence is required, allowing you to manage that evidence. And you can see how you measure up against some great graphs and other reports. So as I talked about, the practical tools and templates are one of our superpowers. On the left, you'll see there's tools and templates kit where you can download certain types of policies and processes and guides. But on the right, you'll see that while you're actually assessing your controls, you can go to these help modules all the way along, which tell you what does this security control actually mean in practical, real terms. What does it look like in real life? What tools and templates we have available. You can download them on the spot, and also that evidence piece. We also have partnered up with CyberCert in Australia, who've recently launched a SMB 1001 standard, which I think is the first practical standard globally, which we hope to roll out more and more. And we've got businesses now and MSPs actually rolling this out across their smaller customers to get certified against a smaller number of controls. And while I know some cybersecurity people will say, well, a smaller number of controls won't make you secure, many businesses are turned off by the larger standards. A great way of getting them on their journey. So our solutions for MSPs and consultants also allow them to assess risks and manage their clients and run customized reports. So we have that the higher end features in the platform. We do all of the risk work for the smaller businesses, but we also allow the more advanced consultants that we have on who are running their consulting business now and doing their assessments within our platform. So our customers are business owners, risk managers, consultants. It's easy to use. There's no setup required. It's there's not a lot of customization because we've built everything you need as a professional or as a beginner into the platform. So we are in year 2 and we're looking to grow in the UK and deliver some amazing AI assurance too. If you're looking for a fresh, practical perspective to assurance, we welcome you to contact us for a demo, and thank you for your time.
Thank you very much indeed, Fiona. That was fabulous. I've now got the pleasure of handing over to Vinesh from Automy.
So Automy, we are actually looking at getting goods to market faster in the supply chain, and that's enabled by complete compliance. Now, overall, every good sold globally, we have a dream that it will go through packaging artwork that's created for them will go through Automy. It's enabling speed to market with safety, and that has been a holy grail for almost all producers. We used to work with clients like Nestle, Bayer, Johnson & Johnson, 3M, Coca-Cola, and many more. And we saw this problem in 2012, and that's when the idea of Automy started first. Now, every single good that goes to market, whether it's a medical device, it's a consumer good, it's a whiskey bottle, or pharmaceutical products, they need compliance. And compliant packaging means not just regulatory compliance, production requirements, distribution channel requirements, national requirements for sales, and production traceability requirements. The packaging design services market just in health space is quite large. You combine that with regulatory authority requirements, that becomes quite a profound area, and there's a reason for it. At its core, Automy is about the story of human impact and its causal effects on industry. Simply speaking, packaging mistakes can have serious medical impacts. So regulatory bodies are very strict with their legislations. Producers now use strict human systems with a little bit of workflow automation, but the result is more time, more cost, and human error risk is still present. Instead, with Automy, we are trying the holy grail: full governance, 100% compliance, and autonomous artwork creation without human intervention that allows the removal of human error. That's speed to market with safety. The human equation for building a system like this includes it's a very senior team with 30 years of experience at an average from Microsoft, IBM, Compal, and many more. We've got an advisory board with senior AI leaders from Microsoft, from GM of Global Ventures for Coca-Cola, from L'Oreal, etc. And just to look a little bit more deeply into the problem, why is it so important? Now, you've got to have many compliance requirements, but almost 55% of all packaging errors and all medical errors that happen, they happen due to, and recalls, happen due to packaging mistakes. The average recall cost is between $10 million to $150 million. The bigger impact, however, is to brand reputation. Smaller companies, national companies sometimes die when they get hit with a recall. Now, recalls happen not that often, but it really slows down the process of going to market. As you can see here, this is a good process system. You're compiling the requirements for the product, you're getting it all together. The artwork is created by internal and external design agencies. It goes into approvals and reviews, and then final production. That's 2 to 6 months on average. Now, with Automy, what we're doing is compiling an information system that compiles everything, all the requirements, all the regulations, all the rules are already present in the databases, and they get put together. The artwork engine autonomously creates the artwork, and it's off for approvals, full audit proof, full audit systems present, and it goes out the door. In a single day, you have the artwork ready for approvals. That means in a week, you can get out what was taking 6 months before. The value for business is speed arbitrage, speed to market. It's worth hundreds of millions of dollars per year. If you look at a single multinational, national revenue in a month is worth a lot. A little bit look into the tech. The key is the intelligent rules database that we have of all requirements for products that go into every market. We have right now absorbed Australia, Singapore, and we are starting on India. We have an information system, a digital asset management system, and patent files on our artwork autonomous engine, which uses robotics in a Swarm AI protocol. They talk with each other, negotiate, and they place themselves compliant with no human interaction. We've got research participant grants from the Australian government, CSIRO, UNSW, which have really enabled us. One of the key factors is build of a regulatory LLM that's actually being built to understand regulatory conversations across multiple regulatory environments, and also to find anomalies in documents. Also a design brain, that's a neural network that will actually enable us to speed up even more. Finally, a look at what the conversations we are having across the globe. We already are in testing with our retail labs and AGJ manufacturing. We are in talks with, we are having Fast Studio setups with Bayer, with Aldi and AGJ, and also with a lot of the global teams. We are already having pre-talks and looking forward to expansion across the globe. Thank you.
Thank you very much indeed, Vinesh, and thank you very much to all of our presentations there. I'm going to hand back to Deb.
Thank you very much, Tom, and thank you to the RegTech startups. Every time I see these presentations, I learn something new, and just what I popped some things in the chat, but actually when you think about the sheer experience, that goes in to these RegTech solutions and the founders, really very experienced industry practitioners, and the diversity is quite breathtaking. So I wanted to take this opportunity to thank our sponsors: Commonwealth Bank, City of London, Investment New South Wales, Engage Hub, SkyJed, Newfound, LexisNexis, our friends from Gung Ho who are online tonight, Vermeg and Castle Point, and also thank you to our startups, Automy, Assuredly, and Gailens. Thank you so much for being with us. In my concluding remarks, research says that RegTech adoption is on the increase, but the universe of RegTechs is yet to be discovered fully by those that need it. And at the RegTech Association, we are on a mission to bring exposure to every RegTech in the world through our platform. So if you're already on there, you are being seen by investors, buyers, and regulators. And if you aren't already on there, I'd encourage you to reach out. We are supporting the idea and conversation that regulators, institutions, and RegTech companies need to come together to collaborate to solve the thorny issues that thwart productivity, efficiency, and safety for consumers. Deep thanks to our members, and our members are listed on that slide there, without whom we would not exist. I'd like to also thank today the moderators and speakers who are busy people and who have taken time out of their day to be with us. Thank you to the Aussies who we are keeping from their evening meal right now. And thanks as well goes to Nathan, our community manager, who's behind the scenes making all of this happen. And I know he'd love to hear from you if you'd like to learn more about us and how to lean into what we are doing. I also wanted to congratulate the finalists in our RegTech Awards. The winners of these awards will be announced next Tuesday in London. It's not too late to register. At least I don't think it's too late to register. There are literally just a few seats left. Nathan had put the link in the chat earlier, but if you missed it, you can go onto the homepage of our website and you will find the event there for the 25th of June. And indeed, if anybody is going to be at the Point Zero Forum between the 1st and the 3rd of July, I will be there. I would love to catch up with you and see you if you're going to be there. There's another link on there about how you can access our events and how to subscribe to our database. This is how you can contact us. There we are. All of our contact details are there. Thank you so much for being with us today. I'm going to leave you with the show reel and hope to see you in London next week or in Zurich the week after. Cheerio for now.